Okay, Assalamualaikum warahmatullahi wabarakatuh and good evening. My name is Khadijah Muhammad Isa. I'm a lecturer from International Islamic University, Malaysia. Today, I want to share on the question from Perwira Senior Berhad. This is a group quiz which we have just recently conducted. So it's a group quiz, yeah. So I will just go through the question first. We'll see how it is. So we have Perwira Senior Berhad, which was incorporated on 11 June 2022. Sorry, in this case, 11 June 2020. So here is an incorporation. And then the commence business on 14 December 2019, all right, and prepare its first set of account for the period of 30th November 2021. So this is the first set of account. In 2023, the company changed its accounting year end to 31st of March. Right? So change of accounting year end from November to 31st of March. So it means that this company, the first set of accounts is year end 30th November. And then we have the new accounts, which is, so maybe I will just highlight the new accounts, which is actually on the 1st December 2021 to 31st March 2023. See, this is the new accounts. So when there's a change of accounting year end, you have to check whether these new accounts, the basis period here from 1st December to 31st March 2023 is acceptable or not. All right, we look into that, and you're also given the adjusted income and loss for the periods. And then the company has the following transaction related to its non-current asset. So on 1st of December 2020, the company purchased machine from Japan for 185,000. And then a foreign exchange loss of 12,000 was realized from upon payment. So here we have loss on the forex on the purchase of the machine from Japan. And then we have the second one on the 28th of March 2021. We purchased office equipment, cost you 1,700, inclusive of 50 ringgit of installation. And then we have July 2022. You have 4 units of computer. Each one costs you 5,800. 15 September 2022, you purchase a passenger car on a hire purchase. So we're given the amount, higher purchase price, and then a deposit of 15,000. And then the cash price is 140,000. Monthly installment over 25 months, starting from 15 of each month, starting from October 2022. All right, and then we have another on 18th of January, you trade in your office equipment, all right, that you purchase on 28th of February for a new one. So whenever you have a trade in, all right, later you're going to look into that. There are two assets here. One is the old asset, and then we have the new asset. So the old asset is disposed of, and the new asset is the new acquisition. So you have to deal with the two assets here, yeah. And then we have the next one is in 2023. When you brought in your personal furniture. All right, so this one is a brought in personal furniture, and it was originally purchased for 42,000 in 2021, and the market value on the date of transfer was 36,000 ringgit. So when you have this one, we have to check further on how are you going to deal with the when you have bring in asset into the business. All right. And finally, on 30th of July, you sold the passenger car. All right. Sold passenger car that you purchased for 112,000 ringgit. So we are going to look into these assets. All right. Because the requirement is that the first one is to determine the basis period. All right. So you have to decide on the basis period for each of the relevant years of assessment, and then compute the capital allowance, any charges, or any balancing allowance on the asset from YA for the relevant years of assessment up to 2024. That is 27 marks, a lot there. And finally, it says that if there is no other sources of income, and then there's a approved donation of 5,000 every year, compute the company chargeable income based on the information provided to you. So that is 17 marks. Okay, so let's do the first question. All right, here is that the first requirement is that for you to determine the basis period. All right, so when there's a change of accounting year end, all right, first thing that you have to do is you have to check, number one, is that the new account, right, is it more than 12 months or is it less than 12 months? Right, so what happened here is that from 1st December, so we're looking at the new account, 1st December 2021 to 31st March 2023, of course, this one is more than 12 months. So if fall under the more than 12 months here, so once the account is more than 12 months, then you have to decide whether the new account closed in the following year or is it closed in the third year. All right, so it means that if it's following year, we are referring to that. So here is 2021, so the following year is 2022, but you see that here your new account closed in 2023, so it's closed in the third year. So what happened when you close in the third year? The law requires that the basis period is divided into two, right? So how are you going to do that? So you see that this period, how many months? From December, 1st December 2021 to 31st March 2023. So in 2021, you have 1 month, which is December. 2022, you have 12 months. And 2023, you have 3 months, right? So this one is December. This one is the whole year in 2022. And 2023 have January, February, and March. So in total, how many months? 12 plus 4 is 16 months. So this 16 months, you are going to divide into two. So you're going to have 8 months and 8 months. So how are you going to divide this period into two periods? So you're going to divide this into 8 months and 8 months. So how are you going to do that? So it means that from 1st December, so maybe I will just write it here. So we're going to have that period 1st December 2021 up to 31st of July 2022. Sorry, 2022, because from 1st December to 31st July, this one is 8 months. And then we are going to continue from 1st August 2022 until 31st of March 2023. So this is another 8 months. So this period actually, all right, from the first basis period here, you're going to divide that into two periods. Why? Because the basis period here, the new accounts is more than 12 months. And then the new account closed in the third year. So that's why we're going to divide that into two periods. And it happened that they have 60 months. So 60 months divided by 2, we are going to have 8 months and 8 months. So that's how we are going to we have actually divided this period into two periods. First is 8 months, the other one is 8 months also. I'm sorry, this one is not 2022, yeah? So this one, sorry, 2022, right? My typo. Okay, so now you have that for the first period, right? You have 2021 here, YA 2021. So here you will have your YA 2022, and here you have YA 2023, and the following account you have YA 2024, right? So you have all the years here for YA 2021, 2022, 2023, and 2024. So list down the period here so that you know that, okay, now you have the 4 periods for YA 2021 to YA 2024. Okay, so that should be the answer, 4 marks for this. Okay, so once you have laid out your basis period, all right, so of course you have here YA 2021, 2022, and 2023, then you have 2024. So now when you go into the purchase or the acquisition of your asset, you have to decide when you purchase, all right, when you purchase the asset, which YA does it fall under? All right, so let's look at this date, 4th of December 2022. So which YA does this period, this date fall under? So 4th December 2020 is which YA? All right, it would be, remember that you commence business, this is your first set of accounts. So even though you acquired earlier, okay, because this period start on 1st of December, February 2021, But when you acquire it, this means that the company has not commenced business. So this date is deemed to be fall under YA 2021, right? 2021. All right. So when you acquire asset prior to the date of commencement, the asset is deemed to be acquired in the first YA, in this case, YA 2021. And then for this asset, the cost is 175,000, but you have lost here. So whenever you have a forex exposure, when you purchase an asset, there could be loss and there could also be gain. So when it's a loss, it's an additional cost to the business. So the loss here will be added to the cost, but if it's a gain, the gain will be deducted from the cost of the machine. So in this case, when you have loss of 12,000, so your QE become 185 plus 12,000. So your QE now become 197,000. So you're going to acquire, this is your qualifying expenditure. So you're going to claim that in YA 2021. All right. So let's decide on the year of assessment and the qualifying expenditure first. Okay. So for the second asset, which was acquired on 28th of March 2021. So go back to your basis period. So 28th of March 2021, this is the period, right? 28th of March 2020, sorry, 28th of March 28th of March 2021. Where does it fall under? All right, it falls under YA 2020, 2021 also. Why? Because this is the period, right? It falls here, 28th of March 2021. So that is YA 2021. So that's why you're going to claim that. And it says that the cost is 1,007 inclusive of 50. So it means that this 50 is already under 1,007. So you do not have to add another 50 because that 50 ringgit is inclusive in the cost of 1,007. So your QE would be 1,700. For the next asset, you purchase computer, and the computer is 5,008. So that one you times by 4. So when did you acquire that computer? 3rd of July 2022. 3rd of July 2022 is in YA 2020 here, right? It's here, so it's YA 2022. So you're going to claim that in YA 2022. And then when you purchase a higher purchase here, so 15th of September 2022. 15 September 20 will be in YA 2020, YA 2023. Okay, that will be the first year you're going to claim for your passenger car. And then remember that this one you trade in office equipment. So the old office equipment that you purchased, this one, 28, this one will be disposal. All right. So you have disposal in YA. Which YA is that? In YA, look at the date. Disposal is 28 March 2020. Disposal was on 18th of January 2023. 18 January 2023 is in YA 2023. So disposal in YA 2023. I just want to give you the facts about each of the items so that when you do the answer later, you can understand better. All right. So you acquire in 2021, dispose in YA 2023. And then the new asset, all right, the new asset costs you 2,500 ringgit. So this is the new asset that you acquire. Control Z, undo. Right? So the new asset that you acquired cost you 2,500 ringgit. So you're going to acquire, so this one is the QE for the new office equipment. So for the old disposal, you have to compute what is there any balancing charge or balancing allowance. All right, everything to do that. And then on the other one is the personal furniture. So we're going to look at the special treatment on this personal furniture. And then you also sold your passenger car that you purchased. So the one that you purchased here is sold in which YA is that? 15 September 2022. Again, go back. Sorry. It was disposed on this date, which is 30th of July 2023. 30th of July, 30th of July, which is in YA 2024. So you dispose, this asset is disposal. Let me check on that, right? So you disposal in YA 2024. You take note of those information so that then you can start doing the computation. All right. So let's look into the computation. Okay, let me check. Where is it? My Teams. I will stop sharing from here. Okay. So now I will share from this. Okay, so this is the answer from the My Excel. All right, the basis period that we have decided earlier. So for YA 2021, 2022, 2023, and 2024. Okay, all right. And then, all right, for the first asset is the machine. I mentioned about just now is that the cost of the machine is 185,000. All right, so 185,000, 185,000. But you add the 17,000, is it 17? It's 12,000. 12,000 loss on disposal. So your QPE is 197,000. And the rate for the machine here is 20% and 40%. So it started from just now, we decided that it was acquired in YA 2021. So that's why you start in YA 2021. Yeah. Let me see. Okay. All right. Okay, so YA 2021 claim IA, and then you're going to claim AA, and AA for 2021, 2022, 23, and 2024. Okay, all right. For the second one, all right, I may need to have this. Hold on, yeah. How do I have this in my... Okay, I will export this. Okay, I want to share this. Hold on, give me export all, export to my AirDrop, export to my MacBook. Okay. Huh? Okay. Open. Okay, so this is the one that we have just now. All right. When we have the first one is in YA 2021. Is that clear? So we are settled with the machine that we acquired in YA 2021. Right, so the machine cost QE is 185 plus 12,000, IA and AA 20 and 14%. So you claim IA and AA accordingly for relevant years from YA 2021 to YA 2024. So in this case, the blue area is the one that we actually give mark, right, to make sure that you are on the track. So this is the QE, the rate, and the first year that you're going to claim is YA 2021. Okay. For the office equipment here, you purchase office equipment. In this case, we have decided that it's in 2021. It's 1,700 inclusive of 50. So your QE is 1,007, not 1,000, not 1,750, because the 50 ringgit is inclusive in the 1,007. So you do not have to add on. However, because this office equipment, all right, the cost is less than 2,000 ringgit. So you can actually claim small value asset, or what we call SVA. So SVA is 100% claim in the year of acquisition. So that's why in 2021, the year that you acquired, 2021, you claim 100%, 1,700. So there's no claim of AA in this year. Yeah. However, you dispose that asset in YA 2023. So how do you know this? Because just now we have read this information. Right, the asset, the office equipment was disposed of on 18th of January 2023, which is in YA 2023. Right, so we have decided on that just now. So when you dispose in YA 2023, okay, let's look into the date of the acquisition. So the date of acquisition is from 28th of March 2021. Right? Full 1 year is 27th of March 2022. Right? And then another year is that you are going to close a year end is for another year it would be from 28th of March 2022 is 27th of March 2023. However, the asset was disposed, all right? Let's put it here, right? The asset was disposed when was the disposal? Disposal was on 18th of January 2021. See, the 18th of January is 18 is less than 2 years. Right? So the period here is less than 2 years. So when there's a disposal within 2 years, you have to claw back. So how are you going to do the claw back? So in the year of disposal, which is YA 2023, the whole amount that you have claimed in YA 2021 will be treated as a balancing charge in YA 2023. So that's what we call clawback. So I want to look into the QE, all right, and then the rate is 100% SVA, and then the balancing charge is 1,007 because why? There's a disposal within 2 years that you have to apply clawback. So there are 4 marks under office equipment. In this case, is the old office equipment. On the new equipment that we acquired on 18th of January 2023, so that is the cost is 2,500. So that is the qualifying expenditure for the new equipment. The rate is 20 and 10% because you cannot apply SVA. SVA only for cost 2,000 and below. So here is the normal rate, 20 and 10%. So that's the rate given. And then you're going to claim that in YA 2023, IA and AA, and in 2024, going to claim for AA. So the marks given is on the cost or the qualified expenditure. Some of you have done, you take into account the disposal value. No, the value of the office equipment is still 2,500. Yeah. So 1, 2, 3 marks for your office equipment. The next one is the computer. It's a very straightforward. Purchase 4 unit of computer, 5,008 times by 4. That is 23,200. Total units, total 4 units cost you 23. However, for the computer, the rate is 40 and 20%. And if you look into the question, all right, they gave you ICT equipment here 40 and 20%. So the rate is already given, but still there are students who got it wrong. Yeah. So it's very straightforward. And computer here, right? Computer, it was purchased on 3rd of July 2022. So this is YA 2022. How you know 3rd of July 2022? So 3rd of July 2022 fall here. So this is YA 2022. So that's why YA 2022, again, can claim 40 and 20%. Okay. And then we had the passenger car under hire purchase. This one is interesting because why under passenger car, whenever the cost, you have a restriction on the passenger car, when the cost is more than 150,000, right? In this case, 175, the rate is, the qualifying expenditure is restricted to how much? 50,000, sorry. No. Careful. This one is the higher purchase price. All right. We are not looking at the higher purchase price. We are looking at the cash price, which is 140,000. So careful, yeah. So the cash price is 140, which is below 150,000. So when it's below 150,000, the qualified expenditure is restricted to 100,000 ringgit. Right. So it means that the QE that we can allow is not 140, but only 100,000. However, this asset is purchased under hire purchase. So you have to do the working to look at how much is the qualifying expenditure for relevant years of assessment. So first thing, when there's a hire purchase, you have to check what is the installment payment. Right, the installment here must exclude the interest. So we take the cost, which is 140, minus amount of deposit paid, which is 15,000. And the number of installment payment here is 25 months. So going to 140 minus 15,000 divide by the 25 months. 5,000 ringgit per month. All right. So 5,000 ringgit per month. So when you acquired incurred on 15 September 2022, go back 15 September 2022 is actually in YA 2023. So that will be the first YA you are going to claim. But in YA 2023, right, you paid deposit of 15,000 and how many installment that you pay? All right, starting from October 2022 and your year end for 2020, was it 23 or 23? Yeah, year end is 31st of March. So now you compute from October 2022, October, November, December, January, February, and March 2023. So there are 6 installment plus deposit. So deposit is 45,000 plus installment of 5,000 times by 6, that is 30,000. So your qualifying expenditure now is 45,000. All right, so deposit plus installment of 6 months. So 45,000, and there's a passenger car, the rate is 20% and 20%, going to claim that in YA 2023. By right, you should also claim in 2023. Sorry. All right, in 2024, but later we'll see. All right, so by right, you cannot claim here. Why? Because, okay, let's do for 2024. So in 2024, you pay installment. So because you dispose the asset in YA, in this case, yeah, 30th of July, you sold the passenger car on 15th of September, on 30th of July 2023. So that is 30th July 2023 is YA 2024 here, right? So when is it to YA 2020? It means that there's a disposal in YA 2024. So you cannot claim any allowance in the year of disposal, in this case, the annual allowance. However, in 2024, you also paid, all right, how much you paid? 5,000 times by 12 months. So you paid 60,000. However, there's a restriction. Even though you paid 60,000, but you can only claim 100,000. So in this case, 100,000, you have claimed 45,000 in YA 2023. So the balance 55,000 you can only claim in 2024, right? So the QE is 55,000. So you have to show me that why is your QE is 55,000 in 2024. You must mention something about the restriction of 100,000. You have claimed 45,000 in the first year, so it means that the balance claim is only 55 available in 2024. So that is your QE. Right, and then again 20%. However, in 2024, you incurred and you also dispose of. So in the year of incurred, you still can claim annual allowance. Yeah, sorry, initial allowance can be claimed in the year of disposal, but annual allowance cannot. Right, you cannot claim any annual allowance in the year of disposal, but you can still claim initial allowance. So that's why there's a 11,000 times by 20%. That's how, is it 11,000? 55,000 times by 0.2 is 11,000. So that's right. So that is the initial allowance, but no allowance claim on the annual. Yeah. However, all right, again, you get back into your acquisition of the asset. Asset was acquired on 15th of September 2022. It was disposed on 30th of July 2023. So whenever there's a disposal, first thing, check whether is it within 2 years or not. And you'll see that 15 September 2022 to 30th of July 2020, that is less than 1 year. So when less than 2 years in this case, all right, you have to apply clawback. So what do you mean by clawback? Whatever allowance that you have claimed on the asset will be treated as a balancing charge in the year of disposal. So what are the allowances that you have claimed under passenger car here? So in 2023, you claim 9,000 and 9,000 IA and AA, and 2024, you claim 11,000. There's no claim in the year 2024 for the 45,000, but 2024, you do claim initial allowance of 11,000. So you add together 11,000 plus 9, you should get 29,000. That is the total allowance claimed on the passenger car. So whatever allowance claimed on the passenger car will be treated as a balancing charge in the year of disposal, YA 2024. Is that clear? Right? So I hope that careful with regard to the in the year of disposal, you cannot claim any allowance and annual allowance, but you can still claim initial allowance. So this 29,000 will be treated as a balancing charge in YA 2024. And finally, we have the furniture, right? What about the furniture again? You brought in furniture, personal furniture. The furniture was already purchased for 42,000. So in the textbook, you have to refer to this where you have that on page 303. I put it here. All right. Whenever you have a plant or any asset personal usage brought into the business. So under para 2A, we have plant or machine which was in use for a non-business purpose prior to being used for the purpose. And 2C is that machine or plant which was in use for business outside Malaysia and brought into usage in business in Malaysia. So in this case, which fall under, is it 2A or 2C in this case? It should be because it was a personal furniture. Before it was not used as a business. So now it brought into the business. So we are going to use para 2A. So how to decide the qualifying expenditure will be the market value of the plant or machine on the day it was brought into use for the purpose of the business. So you were given the market value of 36,000. Even the cost is 42, we are going to use the market value on the date of transfer. And then it's also mentioned that there's no initial allowance available in all situation 2A and 2C. Only annual allowance at the prescribed rate would be applicable. So you can refer this on page 303. So again, maybe I have not covered this in the class, but it's your responsibility, right? The textbook, you have to review everything in your textbook. Right? So we just put this so to make sure that, okay, you have to read your textbook, right? You cannot only rely to my lecture. Okay, so what happened now is that you have the value now, the QPE would be the market value, which is 36,000. There's no AA, no initial allowance, but you can claim annual allowance, and the furniture annual allowance is 10%. But you cannot claim IA, you only claim AA in the year 2024. So from here, you should get 27 ticks, all right, on the computation of your capital allowances, balancing charge, and balancing allowance, if any. Okay. On the second part, all right, question B, it says that, sorry, you have done B, there is 27 marks. And C, all right, given, compute the chargeable income given the information. So you were given at the top here, you have adjusted income and loss. All right, so for the first period, all right, when you have to do adjustment of your basis period, all right, so this loss of 56,000 is also divided into two periods. So each period you have a loss of 28,000. All right, so you have adjusted income in YA 2021, loss and loss in 2022, 2023, and another adjusted income in 2024. So you plug in that information in the format where you have adjusted loss, all right, and then you have adjusted income. So I always inform you that put that under two lines, adjusted loss and adjusted income, so that you remember that you do have losses in 2022 and 2023. You cannot have your adjusted income as minus 28. That is wrong. Right? Your adjusted income when you have lost income is nil. So plug in this 1, 2, 3, 4 information into the formula and then add your balancing charge. Remember that the format is adjusted income plus balancing charge minus capital allowance. So what is your balancing charge? Where you get your balancing charge from? So in 2023, you have a balancing charge of 1,007. Before that, you don't have any. And in 2024, you have another balancing charge of 29,000. So plug in that information. All right. So but I only give on the format, all right. Because if you got it wrong, you got it wrong. So I do not want to double penalize you. Okay, and then, all right, your capital allowance is made up of your brought forward and your current year. So let's look into your current year. So how you're going to put that, all right, maybe there are many ways, but in this case, we're listing down the type of asset. In this case, you have the machine, the office equipment, all right, the old one and the new one. You have computers, passenger car, and furniture. So what we do is that whatever, for example, for the machine, all right, whatever under machinery, right? Machinery, we plug in je lah information on this, right? So we plug in the, for example, the first year 2021. So you should have 66,980. So this is 66,980. So we plug in all the allowances that we claim for the asset. And the office equipment is 1,007 because 100%. A new equipment claim in 2023, right? Computers and all that. So from there, you have your capital allowance. All right, so capital allowance available from here to here for that year is 68,680. All right, similarly, you compute total allowance available for the current year. However, all right, the available here is inclusive of your capital allowance brought forward. Yeah, so this one capital allowance brought forward and this one is the current year. So in this case, you don't have anything brought forward for the first year. So your available is only the allowance here for the current year. So by income here, you have 88,000. Capital allowance available is 68,680. So how much are you going to utilize? You're going to use everything, right? Because income here is more than your available CA. So use everything. So there's nothing left to be carried forward. So your carry forward now is 0. So your brought forward in the following year is also 0. Okay. For the second year, so once you have this, you utilize 68 CA. So your statutory income is actually from your total income here, income plus balancing charge minus 68 utilized, 68, you have a statutory income of 19,320. Okay. Okay, let's go into the second year. Second year, you have income of nil because you have adjusted loss. So income is nil, even though available here is 41,000, but you are not going to utilize any of your capital allowance. So whatever you have capital allowance, you are going to carry forward to next year. So this amount carry forward to next year, it become brought forward in the following year. And the following year, you will have all these as available CA. So you have 92,000 again. All right. But in this case, for the first year, all right, for YA 2022, you're not going to utilize because why? Your income here is nil. Right, you refer to this. Here is nil, so you are not utilizing everything carry forward. So statutory income is also nil. But in 2023, you have income is nil, but you have balancing charge of 1,007. So in this case, you still have income of 1,007. But your CA available is a lot. You have 92,470. But since income is only 17, you only utilize 1.7. So the balance is carried forward to next year. So 1.7 here income minus CA 1.7, you have statutory income of nil. In the following year, remember that this one is carry forward to next year, plus all the allowances available. So you have CA available of 137,840, but income in 2024 is 195,000 from your adjusted income. You also have a balancing charge of 29,000 from your passenger car here. So total income here is 224,000. So from this 2 to 4,000, CA available is only 137. So use all your capital allowance. So there's nothing left behind, nothing to be carried forward to next year. But your statutory income here is that it's reduced from 2 to 4 minus your 137 allowances. Your statutory income is only 86,160. Okay, so I have prepared this so that hopefully you understand the format better. All right, from your balancing adjusted income, adjusted loss, adjusted income plus your balancing charge, then minus your capital allowance. List down all your capital allowance from your brought forward, and your current year is made up from all the asset that you have. From there, you have CA available and how much is utilized depending on how much is your income here. All right, so I put it both here lah. All right, so that you can see that it depends on this income. So, and then that determine how much is your statutory income. Okay. After statutory income, you are going to minus your loss brought forward. All right. Similarly, loss brought forward here, I have prepared that loss brought forward from the brought forward and then from your current year losses and how much loss available, how much you utilize, how much available to be carried forward. So in the first year is 0. You don't have any loss brought forward. Right? It was not mentioned in the question. Some questions do have loss brought forward. So you have to look into the question lah. Yeah. So in this case, because there's no losses, your aggregate income is 19,320. So in the first year. And then there's no loss. So where does loss come from? You don't have any loss in the 2021. So loss is 0. Right, so from there you have donated. Remember that it was mentioned that the company donated 5,000 ringgit every year. So even though you donated 5,000, but your approved donation always restricted to aggregate income 10% of it. So even though you donated 5,000, you can only claim 10% of your aggregate income, which is 1932, giving rise to a chargeable income of 17,388. All right. In the second year, you have statutory income of 0, right? Aggregate income is also 0, but then you have current year loss. So where did that come from? From your adjusted loss at the top here. So you have loss of 28,000. But because aggregate income is 0, so you do not utilize your current year loss. So this current year loss is carried forward to next year. It becomes unabsorbed loss. In this case, I call it as an unabsorbed current year loss, which is brought forward from the previous year. So I put it in the same color here, right? 28,000 here. Now carry forward to next year. It becomes unabsorbed loss carry forward, brought forward. Yeah. And then let's finish here first because here is 0. So loss is not utilized. You carry it forward. So you cannot claim any donation because income is 0. So your chargeable income here is 0. When it comes to the third year, which is 2023, your statutory income is still 0. So even though you have losses, loss here comes from the current year loss, right, of the previous year. So available loss is 28, but because you do not have any income, so this loss is not utilized. So whatever you have, you're going to carry forward to next year. Next year, it becomes this one. So this is actually your loss. Put it here. 28,000 is from here. All right. 28,000 is from here. But you also have least 28,000 from the current year loss, which is unabsorbed. Why is it unabsorbed? Because you have lost in 2023, you have lost 28,000, but that loss is not absorbed because you have 0 aggregate income. So here you are not utilizing any of your loss. So this loss against is carried forward to next year. So now you have lost in the following year, you have 2 types of loss brought forward. One is the unabsorbed loss brought forward, which is actually come from here, right? It's green and green. I put it green and green. So loss here is not utilized. So you carry forward to next year, it becomes unabsorbed loss brought forward. But you also have this loss from the previous year, from the current year loss, which is from here. So this loss now become the unabsorbed current year loss, which is you brought forward from the previous year. So total loss that you have now from the previous year, from here, and also from the current year loss. So now total loss is 56,000. All right. But do you have any income? Yes, you have income SI of 86,000 in 2024. So because of income of 86, now you have loss of 56. So you're going to utilize your losses of 56,000. So is there anything left? No, there's no losses. All right, unabsorbed loss. In this case, it's unabsorbed losses. Okay, I put it like that. Right, there's no loss available to be carried forward because you have utilized all your losses. So from there, right, you see that your statutory income 86,000, but because you have a loss of 56,000 that is utilized, so now your aggregate income become 30,160 only. Right? However, there's no more loss. Current year loss is not available. But then again, donation, even though you donated 5,000 ringgit, but you can only claim 10% of your aggregate income, that give you 3016. So your chargeable income for 2024 is 27,144. So in this level, all right, I also take the figure here. It has to be the correct figure. And also give mark for the term, right? For example, from your statutory business income, make sure that you have the term, you know what is your aggregate income and your chargeable income. All right. So that gives you a total of 17 marks. So that covers your part C of your question number 1. All right. So we have 4 marks, 27 marks, and 17 marks. And question number 2, under the same quiz, we have explain the capital allowance treatment if a business incur cost of dismantling and removing of plant and machinery. All right, so this normally, all right, you have 2 types of costs. All right, dismantling is incurred at the end of the period. All right, before you disposal, you have to dismantle everything. So this cost is actually added to your residual expenditure. Right, so it will be added to your RE. So you have a revised RE, then only you compare. If there's a disposal, compare that with your sales proceed, and then only you see whether a balancing charge or balancing allowance. So most of the time now, in this case, your RE now has increased because of the cost of dismantling. All right, this cost increase your RE, so more likely you are going to have a lower balancing allowance. All right, I mean, you will have a balancing allowance. Even if you have balance check, it will be lowered because that increase your residual expenditure. Right. So for that, I think that's all for the discussion on this group quiz that we had recently. All right, and remember, by this question, you will have 1 question in your final exam. I hope that you have understood how to actually assess the question. Normally, you go through the question and try to understand, all right, decide on the year of assessment, decide what will be the qualifying expenditure. And if there is a disposal, look at what is the year of disposal and check whether that disposal is within or after 2 years. If the disposal is within 2 years, then you have to apply clawback provision. And when you have your hire purchase, you should know what you should do under hire purchase and how to compute the qualifying expenditure, as well as how to allocate the IA and AA. All right, and this one is a special because we have brought in personal furniture into the business. So you should know from the textbook, there is a discussion on this issue. All right, and again, for the passenger car, is a clawback because disposal within 2 years. So I think that's all for today. I thank you for your, I hope that you have learned something from here. Mana I punya ni. Right, with that, I think that that's all. And thank you. Assalamualaikum warahmatullahi wabarakatuh.